This is the ATM fund. This is we basically have been doing this now for several years. So I'm going to get into the history of the fund, kind of how I got involved with it, what I like about it. It really has become, I think, my favorite cash flow investment. And so, I really enjoy this investment for a lot of reasons. I think a lot of multifamily, a lot of other deals, the cash flow has been less consistent for a number of reasons, and this one has been really consistent just since its inception over 10 years ago. So never missed a single preferred return monthly payment, which is huge. I think there's a lot of upsides, and I think an opportunity like this exists for a number of reasons, and I think it will continue to be a great investment in the future. So wanted to create this for you. Again, this is your time. So if you do have questions you want to ask, you feel free to ask. I will also have some time at the end for questions, so you can feel free to make a note or drop that in the Q&A or the chat box, and then we'll get to that when we can. So this is the ATM fund here. I'm going to go ahead and drop through this. Again, this is a disclaimer. This is only educational. This is not actually officially an offering. We've got to make sure that you are a good candidate for this fund before we actually receive your investment into this fund. So this is a little bit about who I am. If we have not met, I think I've met most of you here on this call, but we have over 200 million in multifamily real estate assets with Bronson equity, over 2,000 multifamily units, raised over, I'm actually going to take my screen off here. I don't know if, I guess maybe I can just hide that. Raised over $35 million and $12 million, over $12 million to the ATM fund. For 15 years of real estate experience, we have our educational platforms. We're doing YouTube, a lot of things that are just educational in the space to try to add value. We've also done ATMs, car washes, oil and gas deals, and I've invested in the ATM fund before we brought it to our investors. So that's been about 3.5 years. I've been an investor in the fund and really enjoyed working with this particular deal. So this is what I like about this deal. These are some things that I like. I love that it has a great team. We have an 11-year history of operations in the U.S. It's the fourth largest operator of ATMs in the country. And, cash flow, the monthly payouts on 104K invested, their preferred return, again, this is not guaranteed, but it's a preferred return of 24.9%. So 2162 monthly, starting month 4. And there is no financial leverage. So interest rate risk is something we talk about. If interest rates are going up, they're going down. This is not affected by that. This does not have interest rate risk. These are all purchased with cash. And there is no leverage, which is a real benefit too if you're using a retirement account, that there's no way they can tax you inside of a retirement account, which is the unrelated business income tax, or UBIT, which is something, a little sneaky tax. They try to get you, those IRS folks try to get you in different ways. So no interest rate risk. It's an uncorrelated asset, does very well during recessions. It's a type of asset that does well regardless of how the economy is doing. It's 100% depreciation. The 80% in year one, it actually has better depreciation than real estate. People are wondering, how is the depreciation better? Well, it has, what happens when you have a multifamily property. I'm going to do this in a couple of ways to kind of just explain how multifamily deals work just throughout this presentation, how this is a little different. So with real estate, you have typically a depreciation. Let's say you invest, it's 80% or whatever, 7% or 6%, whatever, year one, you get that as a loss. Well, you have to recapture whatever years you didn't use of the 27.5-year schedule, or whatever schedule you're on. So there's a recapture event. So you kind of just defer and you have to keep investing. This one basically depreciates to zero, meaning, equipment, goes to zero in 5 years. So if it's a 7-year investment, you can take 80% year one, the remaining 20% comes in years 2 through 5. And so there is no recapture. So if somebody has questions on that, I'm happy to talk about that offline too, because that can be a little confusing for some people to understand, but it is a better depreciation. We currently have, I believe, 3 investors that have invested over $1 million over time. Typically, it's not all at once. It's typically over time. They finally like it and they've been able to invest more every year. But this is one of the bigger reasons, just because the depreciation, you can use that depreciation, which is pretty awesome. Some of the team, I know this is a little fuzzy here, so I'm sorry this is a little fuzzy. I just want to kind of give you an overview of the team. This is more clear in the executive summary. So Daryl Heller is the CEO. I've spent some time with him. I was just with him a couple weeks ago. He's founded more than 12 companies in all different spaces. We have Jerry, the president. We have Will Power, the fund manager of the Prestige Fund that works with this investment. Dave Zook's a partner of mine, and then Jack Berry's on his team. And this is a little bit of my bio here. So again, this is all in the executive summary, but I wanted to get into just a little bit about the parent group here. So, or the a couple of how this is structured. So Paramount here is the management group. They're the ones that manage the asset, the ATMs themselves. So over 25,000 ATMs in at least 12 states. They've been operating since 2012. They've grown mostly through acquisitions. They had a big acquisition earlier this year of about 6,000 ATMs. And when that happens, then they have a need to, hey, we need to go out and replace some of these very quickly that may be out of contract. And then really the plan is to, have investors come in, help to, put the money down to pay for these ATMs. And then the new ATMs go in with a new signed contract. So for example, you have a convenience store or you have a movie theater or a restaurant or hotel, and we say, hey, how's it going with the ATMs? Great. Well, we'd love to get you a new one. And we'll, would you like a new ATM? Sure. We'd love to have one. Well, you need to sign another a 7-year contract to do that. So that's kind of how that works, through acquisitions. That's how they've grown a lot. I want to share this as well. The parent group is called Heller Capital. Now, I showed you Daryl Heller. If you go back here, this is Daryl Heller here. He's the guy. He has over 20 interests in over 20 companies, and their businesses in finance, real estate, technology, and other industries. Super impressed with Daryl. And just doing a lot of things in this space, a lot of things creatively and in different areas. So really had a good time to spend with those guys over there. I'm going to get into some of the diligence that I did on this recent trip. And again, the more money you raise for something, and especially as an operator, whether you're a limited partner, I think even more so for me as an operator, as a sponsor, just really making sure we're doing all, checking everything out, making sure things are legit. There's been some stuff that's come up recently in other types of deals where there's just been, we really want to make sure that we're doing just an above and beyond diligence to make sure we can look investors in the eye and say, hey, we've really done everything we really can to make sure that we've looked at every part of this. So happy to get into some questions in that in a little bit too. So the investment structure for this, and I'm kind of moving around because the camera's a little bit in the way of the screen for me here, but the investment structure is accredited investors only. So we do verify that after the investment. We do verify, get your accredited letter. It's $52,000 increments. So it could be 52, 104. There's some come in more like 520 or whatever, but it's got to be increments of $52,000. The reason for that is it makes the numbers way easier. And also, it's a historic thing. They bought so many ATMs when they first started. They just kind of kept that number. The closing date for this fund, this is a quick turnaround. And because of the holiday, we just decided to do the webinar today. But the closing date is September 14th. So you must be funded by that date. I'll get into the process here in a minute, but the preferred return starts 4 months after closing. So we're expecting the preferred return to start at the end of January. And so that would be because we're closing this in September. So it'd be October, November, December, January. So the end of January. And the payout is for 84 months starting January 2024. And it's preferred return starting that date. Okay, I'm going to get into who uses ATMs, because it's something that I think is really, got a couple of misspellings here, sorry. But who uses ATM machines, right? Some people think, well, man, I haven't used an ATM and paid a fee in 10 years. And I feel the same way when I travel occasionally, I'm going to Japan coming up here, I'm going there, I may, I'll use an ATM and pay a fee, and that's the way it goes. Well, who uses them here? Well, it's people that work for cash. It could be construction workers, people that work on the table for cash, immigrants, government benefits, legal judgments. And this is what's really interesting. I'm going to get into some data here that the FDIC came out with a report that said 4.5% of households, so almost 1 in 20 households, have not a single person with a bank account. Now, I want you to think about that for a minute. How much you use the bank, whatever. Well, this is 1 in 20 homes or 1 in 20 apartment buildings. Somebody doesn't even have, not even a single person in the house has a bank account. We say, well, why would they be using an ATM if they don't have a bank, right? Wouldn't they need a bank card? Well, there's something through prepaid cards, prepaid debit cards. People are sending and using money through cash to be able to do this. There's this whole demographic that's using ATMs that is not really a part of the financial system. Over here, it says 14% is underbanked. Some of these numbers could be much higher. There's one study that showed it was around 10% unbanked, another 15 or so percent. If we're talking 25%, underbanked basically means they're using non-traditional finance, such as having a credit card balance, credit card debt. They're using payday loans, sometimes pawn shops, things like this. And so this is just, this is actually happening. So we're seeing this, we're seeing usage actually going up. There was a Wall Street Journal article that came out recently that said the usage of ATMs is going down. But this article only talked about bank-owned ATMs. So there's a reason why bank-owned ATMs will go down. We're actually seeing it not take it, that's actually not happening in the private ATM space that we're looking at. So those that invest in ATMs typically, that invest don't actually use ATMs and pay fees. It's a different demographic, like I mentioned, the prepaid card usage. You see just a whole array of people here that could be using ATMs. This is the FDIC report. You can search this and find this on your own. It's showed right here. If you go down here, 4.5% of households were unbanked, so 5 million households No one in the household had a checking or savings account, and this is the underbanked 14.1%. So, and it shows they're using money orders, cash checking, international remittances, and rent-to-own services like pawn shops and things like that. So it's just something to take a note of. And then over here, this is another, this is something that I learned on the trip going, but this one is a different one. This shows that it's 10% is unbanked and 24% is underbanked. So again, sometimes different, different sources will have different data on that. And this one says this was maybe the total population, right? So in the same, that actually makes sense because the last one was households. Well, this one could be total individuals because you have 2 or more people in one household. So 10%. So 1 out of 10 don't have a bank account, right? So they're using cash. They're using a lot more things that are unbanked, underbanked, things like that. This is the ATM market. So this is from 2018 to 2028. So here we are in 2023. It's showing that, basically we're having growth. We're expecting a 4.3% annual compounded annual growth rate per year in ATM number. This is the number of, ATM. It's just the total ATMs. I think the total money that's coming out of ATMs. So 3.5 billion, and it goes up. I don't have the higher figures here, but you can see this research group has basically determined that yes. And there's 2 different sides. There's one for deployment, which is new ATMs, or something to do with it having to be at an employee site, or there's ways that they break each of these down. I've looked it up, but I can't remember what we would be, I believe, in the managed service side of this. So you can just see it's actually a growing field. We're seeing growth in this. And again, as much as things are becoming digital, we're seeing things really grow on the ATM side and the cash side as well. So something to really take note of. This is not a long presentation, but I wanted to share this just to supplement some of the diligence we did recently, as well as kind of what's happening currently in the ATM space. So like I said, prepaid cards, that's something people use too. Prepaid debit cards, it's over 50% increase. So this is growing as well. You say, why would somebody use a prepaid card? Because they're a cash customer, right? They're using cash. They're using prepaid cards. They can use these with ATMs. They actually send money through ATMs, and people are doing this quite a bit. So this says 468 billion in 2023, up from 377 billion in 2020 and 302 billion in 2016. So you look in the last 7 years, we've seen a 50% increase in this prepaid card usage, right? So people that don't necessarily have bank accounts, and yet they're using these cards to help with transactions and things like this. And we're seeing a lot of people use cash. So this prepaid cards, this is a big part of it. And there is more that I could explain on this if I have a little more time, but it is tied in with ATMs quite a bit as well. Okay, so this is how the fund works. So I'm just going to get into this as an overview. Again, we'll get specific questions here in a minute. Some of this might seem a little simple. Some of it might seem like, okay, well, what does this actually look like? But it's important, whatever you invest in, make sure you understand how it works, right? So understand actually how we generate fees, how we make money. So the ATMs generate fees typically $2 to $4 per transaction. The fees are split. So this is kind of generally how those fees are split out, right? The location gets on total around 30%. This is divided up. Sometimes there's a break even. They've got to get to 1,000 transactions a month before they make anything. And then they get $1 for each transaction or something like you get a certain amount. The operator gets about 40%, including the back end, and the investors get about 30%. So that's generally how it's been described to me, how the breakdown of the fees are. The investment timeline. The investors invest and they receive 84 monthly preferred return payments starting month 4. The payments mix up, and this is a little different too. I'm going to get into this. It's a mix of principal and interest payments. So the difference between a multifamily deal, we'll get into this, is that you have a big lump sum at the end typically, and you get a little bit of cash flow along the way. This is where you're getting consistent cash flow along the way, and at the end it just ends. So we'll get into that here in a second. It's diversified. This would be diversified in a fund of several thousand ATMs across a number of different states. And then it is a preferred return. The operator only gets profits if the investors get their full 24.9%. They've never missed a monthly payment. They've never reduced a monthly payment in over 11 years of doing this. Could it happen? Anything could happen, of course, but it has not happened. And there's reasons why I don't think that will happen in the future. But again, these are just projections. So this is a little bit about it. This is the 104K invested. This is an example here, 2162. This is the cash on cash return of 24.9. Again, this is a mix of principal and interest. So some people say it's so interesting. I have some calls with folks even earlier today. It's like some people say, hey, this just seems like way too high. Like, how in the world could this return be so high? And then I have other ones that say, well, from the equity multiple, it actually seems like it's kind of low. Like it seems like, so it's been difficult to try to present this in such a way that's like, well, this is actually how it works and have people really understand it. So this is all in the documents you received in an email as well. It basically shows, well, what's the kind of the IRRs around 19%. And when you count the depreciation, if you're able to use that, it's more like closer to 39, 40%. Payback in years is 4 years. And then if you count the depreciation, if you're at a higher tax bracket, I think it's you're counting like a 40% tax bracket, then it's 2.5 years. So this is basically the total returns on 104,000 invested. It's 184,108 for this particular offering. This is, again, a typical multifamily deal. Again, I'm just kind of motoring through these, but we will come back to questions. So please do make a note of that, or put that in the chat there, and we'll come back to it in about 4 or 5 minutes here. So this is a multifamily deal. This actually comes from my book. I've got my book coming out called Fire Yourself, which is how to replace your working income with passive income in 3 years or less. So I'm super excited about that. If you want to be on the Book Lodge team, let me know, or let our team know. But this is somebody invests, typically year 0 here. So you can see this is the returns. This is the time horizon. Somebody invests and the cash flow. So they start getting some money back along the way, right? And then at the end of year 5, there's a sale, or year 3, whatever that is, there's a big lump sum, right? So that's the difference. That's what a multifamily deal looks like. Some cash flow along the way, and there's a big lump sum at the end. Well, this is an ATM deal. This like figure should actually be a little bit higher just compared to the last one. It should be a little higher here, but it basically is, starting month 4, it pays, consistent. And at the end, it just ends, right? So there's no big lump sum. There is a small scrap value of those specific ATMs that we do scrap out, and you do get some fee for that. It's a small amount, like 1-2%. It's a small amount, but it is something. But basically, it's just a payout, and it stops. The reason I like this deal is because with the preferred return, you get about half your money back in just over 2 years. So you can actually reinvest. So this is a great investment that if you're like, hey, I don't know what to do, or maybe there'll be deals coming, or I'm not sure, or whatever, this has just been very consistent. And then you can actually go and reinvest, which is really great. So it does structure quite a bit differently than some multifamily deals. This is the recent diligent trip I went on. I don't know, there's some current ATM investors that are here as well. Wanted to share this as well, but I was back in Lancaster, Pennsylvania with Paramount, and I'll show some pictures here in a minute. But basically, we went through, and again, my thought was just there have been some recent stuff that's come up where, it's unfortunately we live in a world where there are scams and things happen and whatever, and things that we think are real or not real. And some, even probably on this call, I've been in some things, that have end up being not deals or just not legit. So I basically went back and I just said, well, these are some things I want to get more clarity on. So I reviewed, the financial records of operations, the master list of our ATMs for the fund. It is a little bit interesting when we do. We can't look at all 3,000 that are in our fund. We have to break out a certain number of them because if we look at all of them, we don't own all of those, and so it's like different groups own different parts of that. So we're able to see quite a bit of that for our fund. I got examples of current ATM contracts, see how they're structured, see where they're at. Looked at they have this really great operating portal. You can see how many are online, how many are offline, what areas, in New York, you see, okay, this one, it's 11 a.m. right now. And at, 10:45 a.m., this one was pinged, meaning this one had a transaction. And here's, it's had 1,700 transactions so far this month, and whatever. It just shows you the exact number of this specific volume, so it's really good. I toured a local warehouse. There are multiple warehouses, but a warehouse where new ATMs are prepped and the old ones are used for parts, which is kind of cool. Instead of just scrapping them now, they're able to save some of the old ATMs and use them for parts. So especially with some of the supply chain disruption, it's been really helpful because I'm able to just go and grab some parts out of there and be able to use them for other things. There's also a bank letter of good standing, which basically involves a third-party financial bank coming in and just really saying, okay, we got to make sure everything is in order here from a financial perspective, the financial audits. There's also random audits that are done by the federal governing body that oversees ATMs. They do them randomly, they do them scheduled, and just learning a lot of different facts about the specific ATM machine. So it made me very comfortable on how everything is structured. So this is an example of a contract here. This is obviously a blank contract, but just, this is multiple pages. I just want to show you kind of a template of what they do when they get someone to come in and sign a contract. And then this, I have, if you go into my Facebook, you can see there's multiple images and there's videos of this. It's just like probably 1,000 ATMs where they can use these for parts and pull them out. And these are some of the boxes. Maybe there's 50 or 100 new ones here. And so getting some pictures in there and seeing this as well, and seeing them coming in and going out and seeing how that process works, which is really interesting to see all that. This is something I think about in every deal as a passive investor, as an active investor. I think, what is the primary risk of this deal? Every single deal has risks involved. And if an operator ever says, hey, there's no risk in any deal, this particular deal, no, like, just start running, right? There's always risks in every deal. So I think this is my opinion. The primary risk is that people stop using cash, right? They move to credit. There's a central bank digital currency. I think that's a risk. I actually asked Daryl Heller, I spent the day with him, and I asked him, what do you see the primary risk as? And he said, he didn't see that as really the primary risk. He thought, maybe there could be jurisdictions. New York State has actually tried to a couple of times implement almost like caps, almost like we have rent control, right? Where to try to limit how much an ATM can charge. So only the fees, they've had a couple of times they've had laws to try to pass it where they limit it to $1.75 per transaction. Again, in New York State, we're typically only getting around $2.50 per transaction, or $2.50. It's actually a pretty competitive place as far as fees. But that law has not passed. I mean, it's come up a couple times, and it's just totally tanked every time when they try to pass it. So those are kind of what he saw. So how do we mitigate that risk, right? Because again, we want to not only understand the risk, we want to understand what are the ways we can mitigate that. Well, like I mentioned, the segment of population using cash is actually growing, and those number of transactions are growing. We could see, this is why I think cash will never go away. I think politically on the right, you've got a strong desire for privacy. And if you can't operate in cash, then you have no privacy, right? And you basically almost just completely do away with the entire financial system. And the central government handles, basically on one ledger, handles all of the lending and all the transactions and everything. So I think there's reasons why that won't happen from a privacy standpoint. Secondly, if all these workers are working with cash businesses and operating in cash, well, that's mostly a politically left type of constituent, right? They, typically will vote more left. And so on left politically, the politicians would say, well, who would this hurt? This would hurt people who work in cash and immigrants and other people that, are on unemployment benefits and things like that. So I don't think it will go away. We saw the usage be very stable, about 90 to 100%, even during the steepest parts of COVID. So we saw it be very stable. And then this is U.S. currency in circulation. This is, I believe, the M0 money supply. I got to check that, but I believe it's the M0 money supply. It just shows how much the physical cash is in circulation. You can see just how crazy, this is in millions of dollars, right? So it's this times a million, right? So we just have so much physical cash that's out there, and we're seeing a lot of it out there. This is why invest, why act now, or why is this a good one to invest in? This is the last fund that we can ensure 2023 depreciation. This one, we will purchase these this year. It will be 80% depreciation for this year. So if you have other passive gains, you've sold other things, you need other losses, you can use that. It does reduce to 60% next year. It's still 100% depreciation next year. You only get 60% the first year, and then you have to kind of save that for future years. So if you're looking to offset gains, that's something how we look at it. It is first come, first serve. We do have limited space in this particular deal. And then what is the process to invest? I just want to go over this, and then we're going to jump into questions. So we have this interest form here, bronsonequity.com/ATM. You can go on there, just complete it. It takes 30 seconds, doesn't take very long at all. And then when we get that back from you, we'll reach out to you and send you the documents. You can endorse those, send you the wiring information. And we also chase you for an accredited form if you already have one. If you've already invested with us in the last 5 years, you don't need to have a new accredited form. But if it's something that you're first time investor with Bronson Equity, we will need a form with us. So that's kind of how the process works. This one, like I mentioned, it closes next Thursday. So just over a week on the 14th of September. So this one is a kind of a short window. We're seeing some pretty strong interest in this one already, but that's the process of how this works. So I think that is our last slide. Okay, we have to ask questions. So I'll leave this here for a minute, and then we're going to take some questions here. It looks like I've got, so the move towards a cashless economy, hopefully I addressed that. TS, I see your question here. I do think, again, this conversation has been here since the 90s, right? And cash is going to go away. Well, cash really has never gone away in any country that I know of. Once they've moved to cash, I don't think that has ever really happened. I think in China they're trying to do it, but they still have not been successful. They have not been successful and China is a very highly authoritative, controlling, government. And they still have been unable to do it. So I think that's definitely something to consider. Let me know if I touched all that. If not, I'm happy to touch on it more. Let's see. An observation is from Seema. I did a ATM 2 years ago, and the monthly cash flow has increased from what I'm getting. So sometimes, again, they different offerings may have different amounts, and whatever the stated amount is for the preferred return, that's what you get. So again, I think over time, as this has grown and as they've gotten more efficient at it, they found a way to, potentially add, higher cash flow or just be able to pay out more to investors. So talking with Daryl Heller, as I mentioned, he's a very creative deal maker. And he's just found very creative ways to get deals done where it's a win-win-win for everybody, right? So that's what we really try to create is to create a win for, for individuals, for investors, for people that are using it, for the clients that have it in their location. It's a win for everyone. What if you've invested in the ATM previously? Will that satisfy accreditation? We can talk, TS, you can reach out to me on that. Can you create a kind of consolidated state K1 instead of each state? So the way that works with K1s, we do have a federal K1, and then there is a state K1 for each of the states that it is involved. I think the last year, it was 8 states. It depends on your CPA, how they do it. Some don't charge more for that. Some charge a little more for that. It is a consideration, but it's something that we have, been able to work through. We can't, just provide one K1. That'd be great, but the states want to make sure that you're keeping track of all this stuff too. Okay, I have another question here. We've got, is there any way to get into this without being an accredited investor? Okay, so I do have an answer for this, and generally the answer is no. This actually, I would say 100% is no. There is a way, though, Philip, to become an accredited investor. I'm going to put this website in here. It's called RegD, regd.com. I believe they charge, it's like $600 a year. You take it as you basically become an investment advisor as you take a test. They don't make you manage anything, but you just pay them a fee and then you can get into it. But as far as I know, that's the only way, if you don't have the net worth and you don't have the income, to actually become accredited without actually being an operator of that specific deal. Awesome. So TS says, I can vouch for this ATM fund. I am in 2 other funds, correct? Yeah, and to be honest, guys, this is something, I'll keep taking questions here, but when I first heard about this, I was pretty skeptical of it. Really, I was like, well, ATM fund, like, how can you track locations and all that? I was pretty skeptical. But I have a couple people that I trust implicitly, and they were just like, yeah, like it's been awesome, and here's the reasons why, and here's what it is. And so I'm happy to get on a call or share. There are some things that I could share on a call with you if you're interested. If you had some more diligence questions, I can kind of walk you through some of the diligence stuff that we did while we were there. It's something they don't really want shared widely because with ATMs, a lot of it has to do with the contracts, with the locations. If I just shared a list of here's all the locations, and somebody took that and they went to all those locations, they could literally try to go, steal those locations and say, hey, now we're using this ATM group. Even though they have a contract with us, they could still try to pull something there and put another ATM right next to it. There's been some kind of crazy stuff that's happened in that, but yeah, in general, it's something that as I've watched all the multifamily stuff that we've done, which is great. There's, love being in multifamily. It hasn't been as consistent on the cash flow. And this one has been really great for that reason. So any other questions there? I'd love to answer any more questions anybody has. Again, we can, go over any specific slides if you want. Like I mentioned, if anybody's coming in late, these are the next steps. This is our interest form, which is bronsonequity.com/ATM. If you are interested, please go to that and just, complete that. It will send you, some more information. It'll send you all the paperwork as well. So you can take a look at that if you want. And, but it's just kind of raising your hand and say, hey, I want you to follow up with me or whatever, just because of the quick timeline on this one. We just like to identify anybody who is interested just so that our team can follow up with you. And so we'll reach out and get your paperwork. Once we get your paperwork, we'll send you the wiring information and we can go from there. So yeah, I don't see any other questions here. Anybody else have any other questions? I'm going to see who we have in the room here. Looks like we've got a group of folks. I had calls with some of you guys recently. Okay, awesome. Yeah, we got some good folks here, I know. Okay, obviously I got another question here. Oh yeah, it's a great question. So John is asking to confirm 24.9% will be the most an investor can make. That is correct. So this one is actually, it is a unique investment where it is kind of a limiter, right? So you can't make more than what is stated, right? But again, over the last 11 years, an investor has made what has been stated. Doesn't mean it will be guaranteed in the future, but it's a preferred return. So before the operator takes any profit, right, they can use operations and stuff, but they can't take any profit until they pay investors the entire 24.9% on an annualized basis. So that is correct. That is the most that an investor can make. So again, structured differently than other types of deals, yeah, so that's but again, to have something that is consistent, I haven't found anything quite like it. So great question. Okay, cool. So I got that one. And if I did touch on your question, but I didn't get as deep as you'd like on it, feel free to go in deeper, and we can chat on it a little bit deeper as well. Timeline is tight. I just bought T-bills. Okay, yeah. So TS, I know you just got some T-bills. Well, maybe you could borrow from the T-bills or sell the T-bills or something. How does the fund itself exit itself? In what time frame? So, like I mentioned, it's an 84-month investment. I'm going to go back to this slide here. So again, a multifamily deal has an exit, right? So, and you can see how there's a big cash payment at the end. This one does not have that, right? You're getting paid. You're getting a mix of principal and interest along the way, and at the end, it just ends. So this is going to be 84 months of payments, and then it ends at the end of around 7 years. So that's the timeline, and basically will be done. So it's those 84 monthly preferred return payments, and then that's when it's up. But the nice thing is, if you are able to get half your money back in just over 2 years, you can reinvest, right? You can basically be able to to take those funds and put it back. And let's say you had 104K invested, and you get a little over half, and you get half back in a couple of years, you can reinvest it in the fund or reinvest it in a different type of deal. So that's kind of the benefit of it. And this is where it kind of throws a lot of people off. The equity multiple is about a 1.8 equity multiple, right? So we went over this. So right here, the equity multiple, it doesn't show the multiple, but it shows right here, if the 104K is invested, well, it's about a 1.8 equity multiple. Well, it's over 7 years. Well, that seems lower than a multifamily deal, right? But because you have a 19% IRR, you're getting your money back sooner. If I was invested in a multifamily, let's just say this had no cash flow, and all of a sudden it was year 5 and I got paid everything and I doubled my money in year 5. Well, that could be lower because I didn't have any cash along the way, versus if I got quite a bit of money along the way and I was getting cash, it really changes, how the returns are. So hopefully that answers there. Thanks for the thoughts, Larry. Appreciate that. Yeah, it's been a lot of fun. I love, hearing about unique things, and it's something I've been investing over the years. Got a question from Brent. Let's see. Does the preferred return accrue? It does accrue. Yeah. So if it's something that, again, it has never been missed, but let's just say it missed for a number of months or a month, or was reduced or whatever, well, it would catch up before. So those payments actually could be higher for those additional months, right, to catch up. So yeah, it would accrue. So it's not like, hey, you either get it or it's not there. It will keep paying out. And so it could actually go potentially much longer than this if payments got delayed, right? But again, the way it's structured is, investors get paid first. So the team is very incentivized to want to make sure that it performs for investors. So great question, though. Great question there. Awesome. Any other questions on this? I think there's some really, really solid questions here. And I know we've got a good crowd on here as well. So I'll kind of run through these slides. And awesome. Well, thank you. I appreciate that, TS. Yeah, trying to make, this, we didn't really have a good presentation for this deal. And so I just, over time was trying to say, well, let me find something that's really going to, help make it really simple, because it can be even more complex because it's a different type of investment. Thank you for that. Okay, cool. Well, if we don't have any other questions, I will go ahead and wrap at this time. If you do want to reach out, you can feel free to, it looks like my email, I'll put my email in the chat here. Actually, I'll try to put my assistant email. This is going to be better email, because then you can get on my calendar. And it is better if you do want to chat. Tomorrow is the best day. I'm getting ready to go on a trip on Thursday, so I won't be available via phone for a little while. I'll be able to email and text and whatnot, or maybe briefly chat. But this is the best email to if you have questions, or you can reach out to this number here. But anyway, I appreciate everybody taking the time to be here. We'll send out the replay of this. It should all be in the documents. We do, I think we've got about a little over 50 investors involved in this now. And it's just, again, we've had a lot of repeat investors that come in that have invested, that continue to invest. So anyway, I appreciate everybody for taking the time, and we'll look forward to hopefully getting you connected on this deal, or if not, an upcoming deal as well. We also have an oil and gas deal that we have a little more space in that we're having a lot of fun with as well. Just a stellar operator with that one. So if you have questions on that, you can reach out. But appreciate everybody taking the time, and hope everybody has a wonderful night.